You, a few years ago, maybe a little bit more than a decade ago, said right at the top of the market that the golden age is over. The president today said that we've hit 81 new market records since Election Day. What sort of golden age are we in now? When is it over?
Well, if I knew, I would probably be doing more in the market in terms of taking advantage of it. Nobody knows for certain. Obviously, we have recessions every 7 years on average since World War II. Sometimes we've gone as far as 9.5 years without a recession, but I would have thought by now we probably would have had more of a slowdown. More people than I, who are in the economics world, thought that probably we would have a slowdown sometime in 2017, or it may be 2018. Today, it doesn't appear that's the case. 2017 is obviously doing quite well in terms of GDP growth and every other metric. 2018 seems to be pretty strong based on what we're likely to anticipate. The tax bill will have some very favorable consequences, I believe, for the economy. I don't see any unforeseen inflation problems or unforeseen unemployment problems. The only thing we have to worry about, I think, in 2018 or 2019 is some unanticipated geopolitical event, the so-called black swan. So if I told you that tomorrow North Korea launched a missile into South Korea, obviously that would have an effect on the economy.
How do you manage a balance sheet in that environment when the biggest risks to the market are unforeseen?
Well, you have to be cautious when you're buying things because prices are high. Normally in my business, we like to buy things at 8 or 9 times EBITDA cash flow. In recent years, we've been buying things at 10 and 11 times, the industry has been, and so prices have crept up. Now, when you're paying higher prices, obviously the returns will probably go down. Now, in my industry, the investors are willing to take lower rates of return because private equity is seen to be a pretty safe investment, generally speaking, and so net internal rates of return of 15% are generally acceptable to investors. 10 years ago, they probably wanted 20% net internal rates of return. I'd say we have to be very cautious and not over-lever companies and be very cautious about being realistic about the returns we can deliver. But right now, the environment is pretty good for private equity.
In terms of the tax reform bill, we've had different estimates of what sort of growth the bill that's currently on the table, both in the House and the Senate, would provide. What's your estimation?
It's amazing to me how some senator or member of the House can come up with a bill, a proposal or amendment, and the Joint Tax Committee can come up with some revenue estimate. Who really knows how something can work in 10 years? Right now, we're playing the game that this is going to increase the deficit by maybe up to $1.5 trillion over 10 years, but who really knows? I think right now, the business community is reasonably pleased with this bill. Everybody's still going to lobby for their little thing in the conference, but I think generally the business community feels this is a bill that is overdue in some respects. There's some things that people in the business community don't love, but most people in the business community, I would say, and I can't speak for them all, I would say generally think it's going to be a positive for the economy.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.